Hi, everyone. I just want to welcome you to our workshop about down payment assistance loans, closing cost assistance loans, as well as how seller credits can help you make a affordable purchase happen for yourself. My name is Reina Miyamoto. I'm the executive director for HHOC Mortgage, and you'll get to know Kathy Lee, our loan officer. She'll be doing most of the presentation today. And Keila Ardowin is our lending manager, who's also here with us today, too. So I just want to tell you a little bit about who HHOC Mortgage is. We're affiliated with the nonprofit organization Hawaii Home Ownership Center. I might call it HHOC, and that's part of the reason how we got our name as HHOC Mortgage, because Hawaii Home Ownership Center has created HHOC Mortgage. The Home Ownership Center is really about providing education to make more opportunities for more Hawaii families to get ready for home ownership, access the information that they need, have a confidential and trusted source to discuss their concerns related to buying a home before they make the purchase. And then even after they become a homeowner, they can also attend workshops as well as private coaching about their home ownership goals as well too. So they offer classes, individual coaching for home ownership, as well as post-purchase services. Currently, the Honolulu Board of Realtors is offering a $50 subsidy off the $60 lifetime membership fee for HHOC. So if you know a Honolulu Board of Realtors member, you can, or you are one, you can use this as an opportunity to refer your clients and give them a gift of $50 off of their lifetime membership fee with the Hawaii Home Ownership Center. We are also, HHOC Mortgage is also the Hawaii's only nonprofit lender as well as mortgage broker. So in terms of mortgage brokering, we broker our first mortgages. So we work with some local lenders as well as national lenders. And we're also a lender ourselves where we loan out our own money in terms of the down payment assistance products and deferred closing cost assistance products that Kathy's going to be talking about in a minute. HHOC Mortgage is also an approved community development financial institution, also called a CDFI for short. And the Department of Treasury actually certifies CDFIs like us. And why that matters to the community and to us is that it allows us access to grant funds. And that's how we've funded and created a lot of our loan products that Kathy will be talking about in a little while. And, you know, CDFIs are really about developing loan products that meet the needs of the community. And we're focused on residential financing. We have also, as I mentioned, provided niche down payment and closing cost assistance products that is meant to be affordable alternatives to some traditional financing that can be available for a first-time buyer. And we also assist first-time buyers who are low to moderate income households. However, there's no income restrictions. We'll help any buyer regardless of income. However, HHOC Mortgage was created to primarily help those who are lower moderate income in terms of our niche products. And with that, I'm proud to introduce Kathy Lee, our seasoned loan officer, who's going to talk to you a little bit about seller credits first, and then those niche products that I talked about. Thanks.
Right. Thank you very much, Reina, for the introduction. Good evening, everyone, and welcome to tonight's session. I thank you for spending your time with us. Tonight, we're going to cover a few items. We're going to talk a little about lending terms. We're going to mention a little bit about mortgage rates, and tonight we'll also talk about seller credit versus price reduction. This has become very popular of late due to rising interest rates and homes being on the market a little bit longer than normal. We'll also talk about city and county's down payment assistance program. We'll also talk about HHOC Mortgage's down payment assistance program called DPAL. We'll give you an overview of this program, and we'll show you what it is to have mortgage insurance, which is financing over 80% versus using our DPAL loan program. We'll also discuss with you what the DPAL benefits are. We'll also cover tonight deferred closing cost loan, or the DCAL. We'll give you an overview and what the benefits would be for you to use the DCAL. We'll also mention to you about getting pre-qualified, and we'll open up for some questions and answers at the end. Okay. Let's talk about lending terms. Seller credit. What is seller credit? Well, seller credit is that what the seller is willing to offer the buyer towards closing costs or the cost of the loan. This is normally offered so that the seller does not have to reduce their asking price. Loan to value, you'll hear it in our conversation or with lenders as LTV. This is the ratio of the loan size compared to the property value. The LTV helps lenders determine how risky a loan is. For example, if the sales price or the value of the property is at $350,000 and the loan amount is at $315,000, then the loan to value is 90%. PMI, private mortgage insurance or mortgage insurance. This is an insurance policy that protects the lender. This covers the excess that the borrower has to lend for you, or the lender rather. Their exposure is going to be 17% if you're borrowing 97%. Conventional loans are 80%. Anything over 80 will require mortgage insurance. Okay. So let's talk about seller's credit versus price reduction. The maximum seller credits allowed is going to be based on what the CLTV, combined loan to value, is that the borrower is going to borrow. So the max seller credit is going to be based on primary residence or second home in this first chart. You see that if the loan amount or the LTV is greater than 90%, then the maximum that the seller can offer the buyer is a 3%. If the loan is 75% to 90%, then the seller can offer the buyer 6%. And anything 75 and below, the maximum that the seller can offer the buyer is 9%. For investment properties, the seller can offer the buyer the maximum of 2%. Okay. Here is a chart about seller's credit versus price reduction. As you can see in the first column, it's the seller's asking price of $350,000. Loan amount is 80%, which is at $280,000. The rate of interest is at 6.375%. Cash to close is $82,250. This includes the 3.5% of closing costs, which is part of your lender's fees, escrow fees, and any other fees associated with this loan, plus the 20% down payment of $70,000. There's no buyer savings, there's no price reduction, and no cost to the seller. The seller will receive $350,000. In the second column, you'll notice that the sales price is $325,000. This is a price reduction. The seller was asking originally for $350,000, but the seller came back with an offer of $325,000. The loan amount in this would be 80% or $260,000. The rate of interest is 6.375%. Closing cost is $76,375. Again, this includes the closing cost plus the down payment that the buyer has to come in with. In this, the buyer saving is $124.78 for their monthly savings. The price reduction was $25,000, and the cost to the seller is $25,000. The seller will receive $325,000 at closing. The third column represents seller's credit. In this, you'll see the sales price of $350,000. This is the asking price that the seller is asking for. The loan amount is 80% or $280,000. The rate of 5.75%. You'll notice that the closing costs is going to be $66,486. This is due to the closing costs for the loan, or the cost of the loan, the down payment that the buyer has to come in with, but there's also a seller's credit of 3% or $21,000. In this, you'll notice that the seller provided the buyer with the seller's credit, and the buyer used that credit to buy his rate down to 5.75%. If you look at the total monthly payments, you'll notice that if the asking price on the first column, that monthly payment is $1,746.84. In the price reduction column, the total monthly payment is $1,622.06. And in the last column, with the seller credit, that payment is $1,634. The buyer savings for the lower price, or the price reduction, is $124.78. But with the seller's credit, they save $112.84. This helps not only your seller, but the buyers, because they get to buy their rate down.
So Kathy, as a question, I noticed that while the price reduction versus the seller credit, it's kind of close in terms of the monthly savings, but it looks like a kind of a big cash to close difference. So, would you recommend that the buyer just kind of talk to their loan officer to kind of weigh their options? You know, sometimes cash to close is a little bit more important. The monthly payment is a little bit more important to kind of determine what should be the best route to go.
Yes, they should speak to their loan officer, because what they can do is do some loan scenarios for them to see which is beneficial for them. Is that going to be coming in with less cash at closing, or is it going to be monthly savings? Sometimes monthly savings outweighs coming in with the cash. But here's a good thing. You can sometimes use our down payment closing cost assistance to help with your closing costs if need be, if you can fit the mold of 120% AMI. So this is what seller's credit can do for your clients. Now we're going to talk about the city and county down payment assistance program. The loan limit on this is $40,000, and funds are subject to availability. This loan program is only on the island of Oahu. If you're on the other islands, you will need to contact, if you're in Maui County, call the Maui office, county office. On the island of Kauai, you would have to call the county office on Kauai. The down payment assistance program for the city and county requires the buyer to come in with 5% of their own monies. These funds may be also gifted funds. Okay. The rate of interest on this loan is 0%. It is amortized for 20 years. And below you'll see the chart that the client meets the income restrictions. The one thing I like about this program is that there is a forgiveness. If you pay on time, your monthly payment on this for 10 years, not being late, the following 10 years, that payment is forgiven. So if you borrowed $40,000, you paid on time, $10,000 for 10 years, your $20,000, the other $20,000 is forgiven. Okay. Now, HHOC Mortgage has their own down payment assistance program. The maximum loan amount on this is $125,000. The minimum down payment requirement for this is 3%. 3% of the buyer's own monies. This can be gifted funds, but the funds must be their own. For example, if the purchase price is $100,000, we will structure the loan at 75% or $75,000. 22% would be this DPAL, or $22,000 would be the loan amount. 3% or $3,000, the client must come in with that $3,000. Okay. It is a 30-year amortized loan with a monthly repayment. Using the DPAL program eliminates mortgage insurance. The interest rate is fixed. It would be either the lower rate than the first or at 4.5%. So if the mortgage rate was at 4.25%, then the DPAL mortgage interest rate would be 4.25 also. Funds are subject to availability. Okay. The down payment assistance program is for first-time home buyers. We determined that the first-time home buyer is someone who has not had home ownership in the past 3 years. The minimum is 700 credit score. This is for owner occupancy only. The maximum area median income, or the AMI, is 120%. This is a second lien position on the property. HHOC mortgage will need to originate both the first mortgage and this DPAL. Home buyers education and coaching session is required from the Hawaii Home Ownership Center. With this chart, you'll see the difference between getting a single loan versus using the DPAL program. 3% down. On the left side, you'll see it's a single loan of 97% financing. You'll see the principal and interest payment is $1,981. And there's a mortgage insurance, MI, for $269. Total is $2,250 is your monthly payment. Using the DPAL on the right side, you'll see that the first loan is $262,005, and the second loan, or the DPAL, is $77,000. This means that the first mortgage payment is $1,531. Your P&I for the DPAL is $390. There is 0 mortgage insurance, and the total monthly P&I payment is $1,921. So this comes out to a savings of $329 a month. Do you think your clients would love this one? So what are the benefits of DPAL? Well, the first one is the big one, and that's no mortgage insurance. Because mortgage insurance is required for any loan that is over 80%. The MI protects the lender, not the borrower. And the borrower pays the premium. Okay. The second benefit for DPAL is you build your equity faster. None of the payments that you make with the mortgage insurance will go towards the equity of your home. So in other words, more of your monthly payment goes towards the principal. So if you did a mortgage or you don't know about a mortgage, a lot of people don't know what is closing costs. So what are closing costs? Well, they include appraisal fees, they include escrow fees, a credit report, prepaid interest, homeowner's insurance you pay for a year, and you can also use it for interest rate buy down. So our DPAL program was created to meet this need. a lot of our home buyers who have saved up a lot of money fall sometimes short for closing costs. This is where the DCAL, or the Deferred Closing Costs Assistance Loan Program, steps in. So the loan amounts range from a $10,000 up to the maximum of $15,000. The loan repayment period is deferred for 15 years. So that means no repayment is owed until after 180 months or when the 15-year period occurs. This is a 0% interest loan. It is required to be owner occupant for the life of the loan, and funds are subject to availability. Okay. So what is the highlights for this program? Well, payback is not due until 15 years. You can also sign up for a repayment plan of 60 months if need to. But whatever monies you borrow, if it's 10,000, you repay back 10,000, 0 interest. You would also repay us back if you sell your home or the home is no longer owner occupied. If you do a refi cash out, you would be required to repay us also. The income restriction is a maximum of 120% area median income. Loan size is going to be determined by AMI and savings matched 6-to-1. Homebuyer education and coaching session with Hawaii Homeownership Center is required. Also, HHOC mortgage must originate the first mortgage. Okay. So you ask yourself, when do you get pre-qualified and apply for financing? Well, what we're going to do is we're going to tell the clients, you need to get mortgage ready. So before you start shopping, you get pre-qualified by HHOC mortgage before submitting an offer. What do you need to provide? Well, provide us with your W-2s for 2 years, the full tax returns, federal tax returns for 2 years, and 30 days of your pay stubs. Okay. If you're self-employed, we need to see your 12 months bank statements for your business. And also we'd like to see your profit and loss statements. Okay. Buyer education is required for this loan program. And I think that's about it. So if you have any questions, here's the contact information. You can visit us on our website, hhocmortgage.org, or give myself or Kayla Ardwin a phone call. We look forward to hearing from you.